Well, to preview the European market, I'm joined now in the studio by Larry Hatheway. He's Chief Economist and Global Head of Asset Allocation at UBS Investment Bank. Thank you so much for joining me today, Larry. In terms of what we've seen, of course, over the last couple of days, quite erratic stress movements. A lot of the markets were closed, but we're seeing Dubai today down by some 8%. Has it changed your view of how to invest globally? Would you today keep more cash just because actually the world does seem quite uncertain?
Well, actually, I think the Dubai world situation is a reminder of where we have been and quite frankly, of the challenges that lie ahead. We're certainly not through the deleveraging and default episodes. This is just another one of those reminders. But we have to keep it also in some perspective. The amount of stimulus that's been applied, the kind of adjustments that have been made in the economies thus far are generating what now looks to be a sustainable recovery. And that's really going to be the basis of the investment thesis as we look ahead.
But are you looking or prepared for a scenario where default, does it mean that you're less exposed, for example, to the emerging markets in general in that region?
Well, I think that within the region there may be some issues, and I think within the EMEA region maybe more broadly is where our concerns lie. That is, the kind of borrowing and lending that results in these sorts of events was particularly pronounced in Dubai itself, of course. In Central and Eastern Europe was, of course, the other locus of that kind of developments, and that's where we've seen the biggest economic and financial dislocation. So we're quite alert to areas of concern in those parts of the world. They're not our favorite destinations. We still prefer areas like Asia within the emerging complex, parts of Latin America as well.
But so, Larry, you really are taking this as a kind of specter of Christmas past instead of things to come. I mean, Dubai will remain contained and is something that we've already been through for the rest of the world.
It does look as though it's going to be contained. I think what we will find out, of course, in the coming days, weeks, and maybe even over the next few months is where the losses are located and which financial institutions are the biggest write-downs going to take place. And of course, those are the areas where investors have to tread very, very carefully indeed. But as part of a broader construct, it doesn't look as though the contagion is going to be that widespread. And from that perspective, we'd rather have our eyes focused on growth and on earnings and on opportunity.
All right. What would you be a buyer of, equities or bonds, currencies? Talk me through your asset allocation program.
Well, it's a bit of an oddity, right? Because we've had such a tremendous year for equities and other risk assets. But it does look as though the next year is going to be somewhat of a repeat performance, not in terms of the kinds of returns that we should expect to see, but it looks to be one where stocks are going to outperform bonds, where REITs are also going to be part of the better performing asset classes. High yield instruments in the corporate debt markets are likely to do better than investment grade. And in part that's because of this stabilizing and normalizing world is one in which eventually policy rates are going to have to change. Long-term interest rates are going to go up, and that's going to lead to the relative outperformance of the asset classes that I mentioned against, for example, things like government bonds.
Larry, what would you actually be buying? I mean, is it still US versus Europe versus the Asian markets?
Well, we do like, first and foremost, the emerging Asian markets. They have performed well, but if you look at their return on equity, it trades at a premium to the rest of the world. Profitability is very high. Valuations don't yet encompass that. So that certainly is our preferred region. With respect to Europe versus the US, we've actually now closed out a position that we had. We think they're going to equal perform going forward.
Larry, thank you so much.